Welcome everybody to your Hawkeye Insider. This is Mike Smith from Hawkeye Traders. Delighted that you could invest the time to watch this video, and where better place to start than looking at the S&P 500. Some interesting action over the last week. Those of you who are subscribed to Hawkeye Options will have heard me talk frequently about this key level of 1940 on the S&P 500. We saw a break of that last session, which really corresponds to this pivot high that we saw at the end of January, this double bottom type of formation we're seeing here. And of course, we've just seen the daily chart move back into a Hawkeye uptrend with green bars over the last few days indicating some buy momentum. And of course, we've got the green heat map there. So really what we're looking for is some confirmation of a break of that pivot high. We haven't broken it with any conviction as yet, and certainly last night's action was pretty tightly range bound after the initial move up after the first hour of trading. And if we do break this, then really the next line in the sand, which appears to be critical, is this 2000 level. Now, what's driving the market up? Well, it's really quite simple. It's oil, and we've seen a move up in oil to test $33 over the last few days, and this is not surprisingly, as the S&P 500 seems to have tracked the oil price pretty closely, really since December, in terms of its direction, then it's not surprising to see both the S&P 500 and oil move up together at this point. So with earnings season mostly behind us now, with the data coming in reasonably well, but certainly not breaking any records, then if we should get a move up from here, expect some further buy-in as people close down on many short positions that are left in the market, and that move up to 2000 in the first instance. From there, of course, may be dependent on what happens with the Fed, on what happens with oil, and of course any further data out of China. So that's where we are as a whole, and the Hawkeye Options portfolio has really positioned itself quite nicely for this move up. We've been cautious, position sizing low, but we are in 3 long call positions at this stage, and we're also into long-term diagonal call spreads, which we're delaying selling calls over at this stage in FXI and GE respectively. So what's happening now? What have we got our eye on now? Well, the first one we're going to have a look at of 2 is Nvidia, and we're going to use the shorter term time frame simply because that fits with where the market is right now. It's still quite fragile. We do need to see a break over that critical level with some conviction. But if we look at the Nvidia chart on the daily, we've had this uptrend forming over the last 2 sessions associated with buying volume. And again, you see buying volume coming in as we came to the bottom end of this downtrend. Once we tested support at around about $25 there, and since then we've had a sharp move up, helped by earnings on this bar here, and now we are testing a pretty critical $32. If we do get a break in this, then we could quite easily see it up to 34 very quickly. There appears to be a lot of fundamental reasons why this is proving popular, both with institutional and retail investors. If we look at the 2-day chart, again, there's that buying volume that came in, and we've broken the top of the wide bar on the 2-day chart. We're in congestion there, any push higher, and we should again see 34. It's pretty clear on there. Here's the weekly chart. This is a classic Hawkeye setup on your slowest time frame. You'll see how the trend dots from the downtrend have scrunched up and are even started to tilt upwards, and there's the buying volume coming in on the weekly. So in terms of a Hawkeye setup, this is about perfect. If we're not in already, we would just like to see it break this critical line at 32 before we jump in. The second chart set we want to have a look at is in XRT. Now, this was one of our daily trading tips that we put out there, which are free. And this is the retail sector ETF. And you will see that, again, we've got a reasonably textbook perfect double bottom formation there. Actual break of 41.50 being the pivot high that we saw towards the back end of January. We've struggled a bit to break over that with any conviction since the underlying moved into uptrend until last session, of course, And there we have the break of the pivot, the buying volume coming in, the green heat map on the daily. We've got buying volume again on the 2-day. We're in congestion from downtrend on the 2-day chart, which is fine. And again, we've got buying volume on the weekly chart with once again that downtrend, those trend dots scrunched up and starting to move in an upwards direction. So this is another that would fit the Hawkeye 3-step method, and one to keep an eye on. In terms of upside potential on this, if we have a move higher from here, we could see it up to 44 pretty quickly. And part of what's going to drive this is that many of the retail stocks are reporting over the next couple of weeks or so. We have GPS, ANF, AEO all reporting, and they are obviously going to influence this as a position. So rather than plumping for one of those stocks, which all look pretty good too, then XRT would be our choice to trade from here. So in summary, we are moving our bias from range bound to upside potential in the strategies that we're using. We are still positioning lower than we would normally to take account of the relative fragility in the market, but there appears to be scalping opportunities. Certainly, if we look at the S&P 500, there's a potential 45-50 point move up to that 2000 level, and we want to take advantage of that. It still means that short-term trading is probably the way to go, so keep on top of the market, don't overposition, and let's see what the market gods give us in the next few days, whether we're going to have a confirmed break over that key level on the S&P 500 or whether we're going to drop down back within a range. Trust that's been useful. We'll catch you again soon. Bye-bye for now.